Okay, I think we're broadcasting. I just have one faithful, dedicated student showing up today, Monique, and the rest of you all just should have came and got the VITA awards yesterday. That's Savannah, and that's Terry, and that's Hilary, and that's Jonathan, and that's Clayton, and that's Cole. Had IRS certificates for all of you, and one from the college, and Sarah was the only one that showed up to get her VITA certificate. Anyway, you'll get those in class or during an exam or in the mail, but you will receive them. Anyhow, this is our last week of class. I was hoping I'd have better attendance this week, but I'm also hoping to win the lottery. And I might have a better chance of winning the lottery than having perfect attendance in this class. All right. Well, we're finishing up a chapter. We have done one chapter, I guess, tried to finish it up on break even and leverage and so on. Uh, I want to get a copy of the test and tell you what's on the test. Uh, Looks like the secretary's got the wrong title on my exam. 306, not 350. Um, okay, this is multiple choice, 50 questions. I want you to know you'll need your calculator. First page just asks you about cost per unit, or what is the margin of safety, what is break even. Now, the second page, we get down to business, and you've got to calculate the degree of operating leverage. You've got to calculate break even in dollars. You've got to calculate I don't know what this question. Got to find profit before taxes and what is break even. Okay, and here, what is the company sales price per unit? What is the margin of safety? So you see, you calculate operating leverage, margin of safety, and you calculate break even. Calculate break even if you want a profit, and then we get to profit before taxes. We have operating leverage. All these are problems you need to calculate. Now we're getting into the next chapter. You have a lot of questions on joint cost, byproducts, and no calculation yet on those. So there's a lot of questions on margin of safety, operating leverage, and break even. So please study those. We looked at some problems. I think Monique knows them, but don't know about the rest of them. Uh, so most of these are questions on joint products, sunk cost, incremental cost, committed cost. Now we get to the problem. Using a physical measure, what amount of joint processing cost is allocated to product X at the break-off point? All right. What amount of joint processing costs allocated to Z at this certain point? Using the sales value method as split off, what amount of joint cost is allocated? So we're allocating a lot of joint costs, so we're going to practice some of that. And what amount of joint costs? 3 problems right there on joint costs. Using a physical measure, what amount of joint processing costs is allocated to product A? Use a physical measure or you use sales value. Use an approximate net realizable value. That's split off. What is the amount of joint cost? Okay. What amount of advertising costs should be allocated to hardware? Refer to this example. They decide to allocate based on expected sales value. So we're allocated based on volume, sales value, realized value. And more joint processing costs. We have 40 questions. Now, that will be approximately 15 of them are probably from this chapter on joint costs. 25 of them are approximately from the chapter on margin of safety. Let me make sure. No, they're split about 20-20. 20 questions on each chapter. Okay, now that brings us up to this chapter on joint cost. Now we talked about joint cost and we talked about allocating cost. Now this is chapter 11. Now what was the break-even chapter, Monique? Was that 9 or 10? 9. So the exam is on 9 and 11. Monique, do you know what day the exam is on? Next Tuesday? What time? Ten o'clock next Wednesday. All right. I think my county principal is on Thursday. I haven't even looked at the exam schedule yet. But it came up on us, and it's here. Okay. Now I'm going to try to use a little bit of a PowerPoint first, and we're going to look at problems, what have you. But I want to look at a little bit of PowerPoint on chapter 11. Here's solutions. PowerPoint's here somewhere. Monique, do you see PowerPoint here anywhere? I need to erase some of this junk. Oh, way down at the bottom. I'm not going to spend a lot of time on the PowerPoint. I want to point out a few things. I don't like PowerPoint. I had to start using it when we did this new system. It's sad that some of your online classes, I'm being guilty too at the community college. I threw on PowerPoint for every chapter and threw on assignments for every chapter. And I didn't have to do anything hardly. I even had it set up where the exams were graded online. And that's what the course was. That's what too many professors do. PowerPoint is not a substitute for a profession, okay? Or real live person. But want to review again the joint process. Um, and that's in these different industries, which I mentioned the other day: chemical, food, ag products, what have you. You know, it may take joint calls to prep 50 acres of land. That's plowing, that's fertilizing, but then you don't have to plant corn on all 50 acres. You may plant soybeans on some and corn on some and wheat on some. But you got joint crops there. But you had joint cost up until you planted those three different crops. So in the ag industry, it is popular. Uh, the cattle industry. Now here they even use just a cow and cutting this cow up into different products. In the meat industry, you have joint cost in raising that cow and butchering that cow. But we know that a sirloin steak, or we know that a T-bone, filet mignon, if I can get out there, sells for a lot more than a round steak, which is tough. All right, we got the materials, labor, and overhead incurred. And we can allocate the primary products of a joint process, physical measure, that could be units, or monetary. Now that could be the net realized value or the sales value, whatever. You know what a joint product is by now. Now I want to mention these again. Waste, just do nothing with it. It has no value. Pollution value maybe. Scrap, incidental output of a joint process with a low sales value. Now, this book didn't go into your journal entries, but for scrap, I would debit cash and maybe credit cost of goods sold to reduce the cost of my goods sold. Now, if you just got a scrap inventory, you may have to debit scrap inventory and credit cost of goods sold. Then when you sell it, you debit cash and credit cash scrap inventory. Now, byproduct, incidental output of a joint process with a higher sales value than scrap, but less than joint. Here, you may just have a different account set up for this byproduct, the cost of goods sold. Somehow or another, you're going to have to get a cost of goods sold, though, even for a joint product. Now, even that, if the byproduct is very small, you can debit cash and credit cost of goods sold. You can put this byproduct in inventory and credit cost of goods sold. We'll just credit debit finished goods even for this product. So it's handled so much different. We got separate cost and we got split off cost. And here's chicken soup. You know, we're going to make chicken noodle, dumpling, or rice, but at a certain point, it's all the same. We've got separate costs and split off costs. Now, I'm going to hurry. I've been through these before with you a little bit. But we're going to hurry up to how to classify outputs. If you worked in this factory, it'd be easy. Your primary product is. You know, in making a cell phone, I don't believe there would be much waste or scrap. I can't even think of a byproduct that they might come up with. Maybe some kind of chip, some kind of camera lens they could sell separate, I don't know, to other companies. It's possible. But probably all these parts are bought from different places and put together. I don't know how they're made. But smartphones are getting smarter than we are. They're getting too smart. All right, now here is allocating joint costs. Is our big problem in this chapter, and it's going to be your problems on your exam. I'm going to do that by physical measure or monetary measure. Physical measure is pretty easy. you've got $150, you've got 300 pounds, you're going to allocate 50 cents per pound to each item that's split off. You do monetary value, you might do it with sales value as split off, net realized value as split off, approximate net realized value. I don't like that method, but sales value is split off. I like that one. All right, let's look at a couple of these bases. We're going to then go to your book and do some calculations. And we're going to try to do one here by monetary measure allocation. All right. List value that comprise the basis for each joint product. So we got product ABC revenue at split off. 4, 1, 4, and 5. Now here we just add that up to 10,000. We know 10 over 10 is 10%. 5 over 10 is 50%. And then 40%. We can change those and allocate the cost. All right, here's the same thing, the percent. Now, if we got joint cost of 3,000, same 3,000, we multiply it by 10% and by 40 and 50. And for product A, their cost is 300. For product C, their cost is 15. I like that method pretty good. Okay, it's pretty easy. That's monetary. Now remember, monetary means dollars. Okay. Another monetary measure here, I suppose, divide allocated joint costs for each product by the number of equivalent units to obtain a cost per unit. Well, we already got to 300, so that don't matter. We already got to 1,500. Now, if we know how many units, we can divide and get a unit cost. Okay, sales value at split off. Using the relative sales value, you use a weighting technique based on selling price or quantity produced. I'm not crazy about net realized value, but we'll look at it. All right. One method, two methods, three methods. Byproducts and scrap. I tell you what, do a scrap, nothing. But byproduct, you may have to use the realized value. If it's the indirect method, it reduces the cost of goods sold. If it's a direct method, it reduces work in process. Work in process goes into finished goods, goes into cost of goods sold. But work in process are those items still not finished. Whereas cost of goods sold, they've been finished. So this is your finished product. And this is your unfinished. Direct, indirect. NRV is traditional. But like it says, not necessarily the best. Now, scrap, you're probably not going to get anything. Zero. Let's say a byproduct. You just count it as other revenue. You don't have to count it as sales from your main product. Second option. Count it as other income. Putting all your costs on it and you've got other income. Not a lot of difference. Now, other revenue is at the top of your income statement. and you got all the expenses deducted from it. But other income is at the bottom of your income statement. Here you're going to add the proceeds to gross margin. That is revenue minus cost of goods sold gives you gross margin. Same as gross profit. Okay, gross profit, gross margin, one and the same. Now we also could reduce cost of goods sold. Well, cost of goods manufactured or cost of goods sold. Now we're going to turn to your book. Now, Monique, I always depend on you. Have I given you any assignments yet from chapter 11? And what were those? Okay, 13, what? Maybe we should look at those before we proceed to give you some review in class. Now, hopefully these I gave you reviewed some of these concepts. Okay, I want to get rid of the PowerPoint. First off, let me go and pick up something here for Cole. And let's see, I gave the secretary door schedule. She didn't make it back until today. Really? Hey, Cole, we gave these out yesterday on Awards Day. That's from Bluefield State, signed by the president, from D9. And this one is from IRS. That's good for a resume. You can frame them or whatever you want to do, Cole. You know, we never look at any of the questions, but usually questions are designed to review the chapter. You're always welcome to do those. Now, the exercises, you mentioned 13, and I guess they start at, they start at 12. All right, let's look at 13, see if it makes sense and to what page it's on. You'll have one last assignment for Thursday after we look at these questions today and then go through whatever we need to today. But 13 on page, I guess, 457. All right, pretty much states physical measure allocation. Now, that's the first one I mentioned. That usually should be the easiest. All right. This company uses a joint processing system. How much joint cost should be allocated to grade A and grade B? Now, what are they producing? This is, the name is for something. Are they producing lumber or what? All right, let's see. Look at number 13. It's on the screen. Okay. Monique, what was the 16,200,000? That cost, that total cost up to this point? All that's joint cost up to this point, isn't it? All right. Now, it's this board feet, 36 million board feet. And I tell you, a linear board feet I thought was 1 foot by 1 foot by 1 inch. All right. Now that's 45 cents per foot. Grade A, 27 million board feet. Grade B, 9 million board feet. Multiply by 45 cents. Now that's an easy way, isn't it, to allocate joint costs? By the physical units. We take the units, 36 million. Total cost, 45 cents. How many grade A units do we have? How many grade B? Oh, I know. This could be grade A could be oak. Grade B could be poplar. Name of trees. Oh, what have you. Now, that's easy. I expect you to get that on the exam. Physical measure. Now, B part. B part, we have our 27 million all the way down. But what are these incremental costs? 80 cents, 75 cents, and 5 cents. What did it say the 80 cents was for? Monique or Coke? What's the 80 cents?
Doesn't mention it.
It's got to mention it. Exercise 13.
I guess it's the $1.50 minus the 7%.
Now it says the company can sell grade A lumber at a split off point for 70 cents. All right. Okay, if they can sell it at 70 cents, now alternative grade A lumber can be further processed at a cost of 75 cents. That's if we want to further process it, right? 75. And then sold for $1.50 per board foot. No opportunity cost. All right. Now, where is 5 cents coming from? Is it mentioned?
Guess in the 80 cents minus the 7%.
80 minus 75. But where's the 80 cents come from?
$1.50.
Okay, did they mention the 70 cents?
Yes. How's the split on point per board?
They did, yeah, per board foot. They mentioned. Okay. That's what all the figures come from. Okay, the incremental cost, revenue, 80 cents times 27. That's revenue. We know that revenue minus cost of 75 cents gives us an increase in our net income of 5 cents. That's our incremental revenue and incremental cost and incremental net income. Incremental means that extra. Here we just allocated costs. Here we found net income. Based on the incremental change in net income, the company should proceed grade A lumber further. Now grade A, we know, is the biggest part of the lumber. Now sometimes if you get addressed to before, or an undressed to the fore. The undressed to the fore is really rough because that's a sawmill. But when they dress that up, it's smooth all over. Okay. All right, number 16. Okay, so that was the physical units method. It clearly is a good example. Incremental income, clearly a good example. And now we look at 16. Physical and sales value allocation. Now, this company, well, they're selling beef, convert it into three products: steaks, roast, and ground beef. Okay, we got steak, so many pounds, and roast, so many pounds, and ground beef, so many pounds, and we got sales values. Now, which one has the best sales value? Well, you sell steaks for a pound. What do you sell ground beef for a pound? A lot of difference in it. But they have joint costs of raising that cow, butchering that cow, cutting that cow, and so forth. Have any of y'all ever heard of Cuz's restaurant? You ever been there, Cole? You gotta eat there sometime. Well, so when I order a ribeye steak there, or they got prime, I order prime steak, and they got ribeye. I guess they've got filet mignon, sort of. But if you order a steak there, I order one steak for two people. It's that big. If you get a ribeye, it's that big. Okay? And people come from all around to go to Cousins. It's between Tazewell, Town Off, and Claypool Hill. Spot off. Okay? If you ever get a chance, go there and at least eat once. The restaurant is in a barn. It used to be a silo in a barn. It's burned down once they built it back. And the lady is from Taiwan or somewhere that runs it and owns it. Okay, A part of number 16, allocate the joint costs for the three products used in the physical units. Now, we just did that on the other. Steaks, pounds, roast, pounds, ground beef, pound. We can change those percent. Here's your cost. Now you can make a big old fraction, 3,312 over 13,800. Cole, take your calculator and divide 13,800 into 3312. Come in, John. Take 3312 divided by 13,800. Did you get 24%? All right. So you're just dividing the sum in each individual item. Now that's easy. The physical unit method is easy. Let me get John here.
That person that called you, called me, they're coming and they need to return. Gotta look for the address. So just mail Hillary's and.
Hillary and Terry will show up on exam day next week.
Terry said to mail hers.
Who?
Terry told me to mail hers too.
Mail Terry, mail Hillary. It's mail the code.
Yeah. And there's.
That plate to show up, like, mail it to them. I'd like to get all of our accounting code. graduation, we'll make it 10 to be there. It'll be you and Savannah, Michael, Hope, Barbara, Tanda, Livia, Caitlin, Mrs. Bobby,
Brianna,
Deanna,
Kayla.
I mentioned Caitlin. Caitlin.
There's Kayla and Caitlin.
Okay. Caitlin, you're right.
Jordy.
You know, definitely Georgia. We got about 10 in county making graduate.
A mixture of accountancy and business administration in county.
Yeah, don't forget.
Yeah.
But yeah, we want to try to get a group.
Pretty decent sized group. They've only been like 3 or 4 the last couple years.
Yeah. Try to help me organize it, get them together so we get kids. All right, now B part was it say for number 16. Allocate the joint cost to the 3 products using the sales value at split off. Now you're going to have a lot of these on the exam. You're going to have this one, physical units, break them down to percent. You should get it in a multiple choice question. B part. That gives you these sales value on number 16. $4.25 a pound for steak. $3.80 a pound for roast and 90. Now we get total sales value of 41,000. Now what percent is steaks? For example, okay, Jonathan divide 41,524 into 38.50. That gives you 9%. All right, now, we know how to get the total sales value, 41,000. We know what percents they are. But now what is this 34% of what? What's this 34% of what to get 89.76? Go? No, it's not 34% of 14,000.
26,000.
How much?
26,000.
All right, right here. That was the total cost, wasn't it? Total cost. So whatever your total cost is, that should have been given, 26.4, multiplied by 34%, and then 57 and 9, you get allocated joint cost based on sales value and split off. You'll have a couple of those on the tip of the thing. All right, and C part of number 16, assume that the ground beef could be processed into sausage. All right. Okay, this was steaks, roast, ground beef. But here, we're going to make sausage, I guess. What's the selling price? Is that for sausage? Is that selling price for sausage? All right. Now we know that, trying to find another number up here. Ground beef was 90 cents, right? Okay. Now where does the allocated joint cost come from? Where do we get 56 cents? No, the allocated separate cost is 99. But where do we get 56 cents, 15 and 40? So give it to us.
Gives 15 and 40 volunteers.
Gives you 15 and 40. Special label, 15 cents. Profit desired, 40 cents. Allocated joint cost, 56 cents. Where's that coming from then? Let's go up here and look at the ground beef. Let's see. For ground beef, no, it's 90 cents here. Sales value split off. Monique, how do you get the 56 cents? You got it, didn't you? All right, we got to find that. Let's read the problem real well, I guess. Part C. Assume that the ground beef can be processed into sausage. Well, we have the 210 to a distributor that wants special beef costing 15 cents per pound, a special labor costing 15 cents per pound attached to the sausage. Well, we got that cost of 15. If this beef company uses the sales value split-off method to allocate joint costs, what is the maximum separate cost of producing, processing that the company could incur to still appear to earn 40 cents? So the 40 cents is clearly given, the 210 is clearly given, the 15 is clearly given. And if this does separate costs were incurred, would you consider the 40 cents per pound a real profit? All right, let me see if I've got a couple of calculations here. Don't believe I do. 40 cents should not be considered real profit because the allocated joint cost would change simply based on the allocated method. However, the sausage sale would be profitable because the incremental revenue, $1.20, that would be 210. They gave you the 90 is greater than the incremental cost of $1.14, which is 99 cents plus the 15 cents. For whatever reason, 99 cents plus 15, $1.14. Still, I need where the 56 cents comes from. What?
Right above City Workers, didn't mention the still.
The problem mentioned A is corrected with this method. Because the joint cost assigned to each pound of ground beef sold is now only 56 cents. There was no way to calculate that then, was it? So it was given. So you allocate separate costs towards 99. But why are they taking 90 from 210 instead of 99? I guess they gave you that. Well, they gave you that. Okay. You won't have anything that tough on changing. We'll deal with these three. We won't send ground beef into making sausage, and we won't send anything else into making wieners or whatever, all beef wieners. Okay, number 17, net realized value method. You have games, and you have news, and you have documentaries, okay? Now, this media form has three groups: games, news, and documentaries. In May, the company incurred $24 million of joint costs for the facility and administration. May revenues and separate production costs of each group is delivered. What amount of joint costs is allocated for each operating profit? Now, maybe this is a TV station. They have news and they have movies. And what else they say they had? Games, I guess. Okay, they had news, documentaries, and games. Okay, let's look and see what's given. Games. Do they have the revenue listed for games? Is that clearly stated? Now, is the cost clearly listed for games? Okay, so clearly then we can find the net realized value. Games is going to make $3 million and documentaries $78,600,000. Now, where does the percents come from? If you add these three together, what do you get? Add these three together. Net realized value.
96 million.
That gives you 96, right? All right, now 96. Now divide 96,000 into 14. Divide 96 million into 14,400,000. Could give you what?
15.
All right. So we're taking the 96,000, the total NRV, net realized value, and we're breaking it down in what percent of that was gains 3, news 15, documentaries 82. Now, when we get this joint cost, they give you the 24 million, don't they? Do they give you the 24 million? They have to. Okay. Now that's your cost. 3% of that cost goes to gains. 15% of that cost goes to news, right? And 82% of that cost goes to documentary. That's where your 24,000 went. Now I can take my revenue from these gains and my separate costs to produce them for these gains, and then my allocated joint costs, and I can get net profit. This NRV was not net profit, it was net realized value. So net profit should always be smaller than NRV. All right. I think they should make more documentaries. That's where the money's come from, isn't it? You know, some businesses, they do some things for losses. Now, like Walmart, they may put a sale in on, and they may be taking a small loss on that sale item. But it gets people out in the store, don't it? They buy other stuff. Well, you put that one item in the back of the store, and they gotta walk by some other stuff that tips them to buy. That's just marketing, okay? All right, let's look at C. For B part, what amount of joint costs is allocated to each operating group of allocation if it's based on revenue? Comparative profit for each group after the allocation. Okay? You got to study these. Are we allocating? The easiest one is units, physical units. All right? Here, I look at B part, I guess. We've already. All right, B part, here's our revenue, which is given. All right. What is 254 million? What did it say that was? Well, 254 million. All right. Did it give you 34,400? Did it give you that?
Okay, so it's all the.
All of these added together would give you 254, right? All right. 254,800,000 divided into 34 gives you the 13. 12 and 75. So now if we take that 24,000 million times 13, 12, and 75, all right, then if we take the revenue, the separate cost, which we had up here, now look at this allocated cost, that was 700 how much? Under A part, 700 what? But now look down here, same thing, except we've got different allocated costs. And it's going to reduce our profit here to a loss. News is going to have more of a profit, and documentary is going to have a little more of a profit. So please look at those. It's all about the percents and allocation. All right, we had 19 and 20 for today, which we're probably not getting to. I'm going to show you 19 real quick. 19, this also, I don't know if that looks like physical units, but we'll look at this come Thursday. But again, you're breaking it down. Now 20, here we got butter, ham, and butter and jam insert. Butter and jam. All right. And sales value, split off sales value, then incremental revenue. So we'll work the same thing over and over. So let me try to give you some homework that also again applies to these. Now, try to do these by Thursday. It's your last assignment for the semester. Now, everybody's got pre-registered to get your 5 points extra credit there. Jonathan, you pre-registered. Now, we got Cole pre-registered. How about you, Mom? Okay. Turi, I hope Turi's got hers in. Hillary, they kept hers up on the hill, but I'll get it straightened out, Hillary, on your pre-registration. All right, now let me add to these. We went up to 20, and I feel like you need some more practice. Do number 22 and 23. Now this is sale or process further. Now if we jump down to 25, joint cost allocation by products. And I want you to 28, which is the realized value. We're just rehashing some of these. I want you to do 32, byproduct. We've got to look at some byproduct. And I want you to do number 36, scrap. That'll be it. That's 6 problems. And please try to do those, and please try to attend. And Jonathan, that's your certificate, and it'd be good for a resume. Hang on to it. We'll put it in a frame. And you are free to go today.
So we don't have to come back?
You're free to go, but come back for taxes.